Another YouTube video here at Alchemy Trading. You are with me today, Lewis, a head trader at Alchemy Trading. And today we're going to be looking at Bitcoin because something very interesting has taken place over the last few days. And those things have really given us a determinant essentially of what now my bias is with Bitcoin. So before I move ahead into the video, I would like to ask if you guys can drop a like and a subscribe and hit that bell notification so you can be reminded every time we post and upload. So Bitcoin, weekly time frame, order flow. Let's see what we have, right? We can see here in March of 20th, we put in our pretty much swing low. We bottomed out at around $3,887, which was perfect time to get in. It was around when COVID kind of hit. That was a prime time that I was essentially jumping into the market. Very, very good buying opportunities indeed. So we can see then from this swing low right here, we've put in this huge high, right? And this high then, if I go and take a fib from that low to that high, from this low to that high, the swing low to the swing high. Now for me, a pullback phase has completed when price retraces back to that 50% fib level. If price retraces to at least 50% of one price leg, that is a pullback complete. And then you can go ahead and see the new leg be put up. And so that's exactly what happened, right? Like we came down into levels in here, into our weekly demand area that was essentially wicked straight through, inducing probably a lot of sellers, but a lot of liquidity nonetheless. We still have a lot of resting liquidity down here at around 28,000, 29,000 for Bitcoin, which I do think we will see sometime in the future. But for now, in current price action, we can see that when we put down our new swing low, we have actually taken out our supply level, our supply zone that actually put in the swing low. Now, if any of you kind of are wondering what are these supply demand levels, like how do I read the market, how I do read the market, we do have a premium community that teaches exactly what I'm going through right now. I just don't have the time in this video to explain what is a supply level, what is a demand level, what is order flow, etc., etc. However, we have our supply level in here, which is the supply that came into the market from banks and financial institutions that essentially pushed price to where it was. Then we made a swing low. Then we started to see the retracement back up to the upside, and we had a break of structure. When price broke structure to the upside, we had two levels and where price was going to retrace to. Price was going to retrace to demand level 1, which it did perfectly. It had its reaction. It had its reaction to this level, as you can see with the wick. It wicked perfectly in and around this level. So it had its reaction, but failed to take out the new high, which meant, okay, it's more than likely an area of liquidity. So we're going to go and take it out, right? But in the process of taking that out, we do actually change character at the same time, because the demand level that put in the new high has now been broken, which means supply is taking control of the market. So simply put, if there's more supply than there is demand, price will go down. So this is change of character to the downside because supply has now taken out demand. And essentially that change of character really took place from this supply level right here. Supply level right here. This is kind of the leg down, the interaction with the demand, the failure to demand outweigh to supply, and then supply regained control of the market. But in the process of doing so, price has come all the way back down to the origin, which means the original demand level of the whole entire leg, right? So if I just pull that out, and essentially what does that look like? It looks like order flows like this, and then we have two areas. We have demand level number 1 and we have demand level number 2, and these demand levels, these are areas where big players, banks, financial institutions, hedge funds, they have orders pending at these areas of price. Very evident to see in terms of this is just data. These candlesticks are just data of buy and sell action. So it's very easy to see where there's an excessive amount of buying and selling, and where orders are left behind because price never revisited that area to mitigate that level. It's called mitigation, which is again something that we go over in depth. This is kind of for anyone kind of familiar with smart money already. If you aren't familiar with smart money, you can go ahead and learn, and you will understand exactly what I'm saying. But even if you're not, you can just stick around and basically understand where I'm telling you price is going to go, right? With that being said, we're inside of our demand level right here. And as we react to the demand level, we have a change of character, right? This supply level right here that put in this low was broken. Supply to the change of character to the upside, which simply means that the demand level right here inside of this unmitigated wick, the demand level right here has taken out the supply level, meaning there's more buyers than there are sellers in terms of pending orders. There are pending sell orders in this area, there are pending buy orders in this area. If the buy orders take out the sell orders, that means that there's more buyers than there is sellers. There's more buying capital than there is selling capital, which obviously can only mean one thing: that price goes up. So I was a bit skeptical. Like taking a look at Bitcoin, I was a little bit skeptical because I was saying, okay, we're in the middle of this range. Price isn't determined. I'm going to sit out of the market. But now, over these past couple of days, what happened was we changed character. We come back down to mitigate the demand level that changed the character, and now we have flipped the supply that put in the mitigation. That's called a flip. Let's go down to the daily time frame so I can break this down to you more clearer. You can kind of see it better. All in all, just to recap over what I've just gone through, this swing low down here has put in this swing high right up here, and we've come back all the way down to retrace to it. We came back down into our weekly level, refined down to our daily. Had a very nice interaction with price. Price came down, retraced around 5 or 6%, and then essentially took price back out once again. Price comes into our weekly level, then we have a change of character. We had our change of character. Price comes all the way back down to the unmitigated level of the wick right here to collect more orders. Price was ranging in between this level, from this low to this high. Price was then all of this in here, all of this was a range, and that's why I was sitting out the market. I'm like, okay, price could go down, price could go up. Like, what's going to happen? I want to wait for the market to show me its hand. I have a saying, this is the casino, be the house. So I'm waiting to see the house. I'm waiting to see the cards before I make a bet. And so now it's very clear to me that we've seen, here's our swing low. Here's our swing high that put in the swing low. Here we've had a break of structure to the upside, which has now confirmed to me that Bitcoin is continuing on its bullish run. For the most part, it doesn't matter if I am quote unquote late to the party, in terms of, you could have been people probably getting in here and I've missed 25% of the move. Doesn't matter, because how many people were buying the dip, 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 and I was exiting the market. I exited the market at $62,000. I called it at 67. Unfortunately, I didn't get it on YouTube when we had this change of character sweep and then continue. I actually exited my positions at around 62,000 because it was confirmed to me. We'd had a break of structure. We're coming for a retracement. The price is going to at least retrace into 50% of the net. Price was going to at least trace to 40,000. So if I'm at 62,000 and I know price is going to retrace to at least 40,000, then it's best for me to get out of the market and reevaluate when we get there. The reason I didn't just get straight back in the market here is because, well, until I see X, Y, and Z, price hasn't confirmed to me that we have shifted its narrative back to bullish. So why am I going to get in on a speculation whilst a lot of the industry are buy the dip, buy the dip, buy the dip, buy the dip, and there's still average dollar cost into the market is higher than what price is now, or at least if profit very little for the most part of traders. And then there's of course the people that were buying up here and actually selling their positions down here thinking it's going to zero, and there's many of those. So yeah, my narrative has now officially changed. I am back bullish on Bitcoin for the most part. Evaluating where we're kind of going to see, well, it's very clear to me right now that this high up here has failed to break this swing low, which makes this high weak. So what I'm expecting right now is something that looks like this. Let's go to the daily, and you guys can screenshot this or save this or whatever you need to do with this. But let me show you what I'm seeing right now. I'm expecting that there's going to be certain areas of price that Bitcoin will have its retracement, but now we're probably going to be heading up to and around here, pulling back somewhere, new highs, pulling back from this level in here, this supply level, come back from here, maybe have a pretty big pullback from here, inducing a lot of sellers, and then essentially expecting a $70,000 Bitcoin, go ahead and take out this high up here, because from an order flow perspective, the order flow is in favor for the bulls in this one. Because if I just point it out to you very simply, we can just see like external structure, which is the most important thing. It's just bullish order flow, and all of this in between, it's just noise and areas of where you can get in. But yeah, so now we're expecting a nice move, and now I can start to re-enter the market at my desired levels and catch the next 50%, instead of just gambling and hoping that price will go up that 25%. The same people that were gambling hoping price will go up when it was coming back down to 59, and they were buying again at 49, and they were buying again at 40. It's like, no gambling. I'm waiting for exactly what I need to see for the market to confirm to me where it's going, with a lot more accuracy and a lot more certainty. So guys, with that being said, that's our Bitcoin wrap up. Hope you guys enjoyed. Smash that like button, leave a comment below if you have any suggestions on what you want to see on this channel, any cryptos I can break down. I can read the market like a book. All markets essentially move the same, they are governed by the same laws. And yeah guys, with that being said, thank you very much, and I'll see you in the next one. Peace.